If you live in the United States, I believe you might be familiar with tax now and tax later, also known as tax defer. Well, there is a third option called tax advantages, also known as tax never. And the beauty is, all three options are legally approved by IRS, state and federal in the United States. Knowledge is not power until it is applied. Understanding these options will help you to make informed decisions about where to place your money based on your financial goal and tax situation. In this video, I'm going to share with you what is tax now, what is tax later, and what is tax advantages, also known as tax never. Hey there, welcome back. You're with me on Be a Moon, not a Star. The first option is tax now. To say it in simple words, you pay tax upfront as you earn or invest. For example, if you are an employee, you pay tax upfront before you receive a paycheck. And not only that, there are few investment vehicles also comes under tax now bucket. The first one is CD or bank saving. Let's assume that you have $5,000 in your CD. Whatever interest that you earn, you have to pay tax in a given year. And if you look at other investment vehicles like stock market, equity market, or mutual funds, you have to pay two different type of taxes. One is the capital gain tax, which means when you buy and sell any stock in your portfolio, you have to pay tax in a given year. And the second one is a dividend. There are some stocks, mutual funds, or ETF which offers dividend. And if you receive dividend from your portfolio, then you have to pay tax in a given year. So all these investment vehicles, and there are certain income you have to pay tax right now. It's called tax now. The second one is tax later, also known as tax defer. For example, the majority of the traditional retirement accounts like traditional 401k, traditional IRA, traditional 403b comes under tax later, which means when you contribute your money to these retirement accounts, you are not going to pay any tax. However, when you withdraw your money from these investment accounts, you have to pay tax for that, which is called tax later, also known as tax deferred. If you are new to the investment world, let me share with you what is meant by traditional 401k. Profit organizations offers traditional 401k to their employees. What is 403b? Non-profit organizations or charity or some public sectors offer 403 to their employees or their staffs. The third one is traditional IRA. Traditional IRA is an individual retirement account that can be purchased in the open market. And the fourth one is SEP IRA. Simplified Employee Pension Plan. Let's say if you are a self-employed or you run a small business where you have only few employees, then you can offer SEP IRA to your employees. In general, the traditional retirement accounts like 401k, 403b, IRA or SEP IRA comes under tax later, also known as tax defer. And the final and most important one is tax advantages, also known as tax never, which means you legally avoid paying taxes on certain investment vehicles. To say it in other words, after paying taxes, you invest certain money into certain investment vehicles. Therefore, the money that accumulates in the account, you're not going to pay any tax. Well, when you withdraw your money from that investment vehicle, you are not going to pay any tax. Altogether, you are avoid paying taxes legally. That is why it's called tax advantages, also known as tax never. Let's see what are the investment vehicles that comes under tax advantages. The first one is certain retirement account like Roth IRA or Roth 401k or Roth 403b. These investment vehicles comes under tax advantages. And the second one is certain life insurance product also comes under tax advantages. For example, indexed universal life insurance. And the third one is HSA, Health Savings Account. And the caveat is whatever money that you have in your HSA account can be used only for medical expenses. And the last one is education plan like 529. Again, the money that you have in your 529 account can be used only for the education purpose. We talked about tax now, tax later, and tax never. Now you may wonder when to use tax now, when to use tax later, and when to use tax never. Let's talk about that now. Let's begin with tax now option. You can use tax now account for short-term goals where liquidity matters. For example, if you want to save money to buy a car, or if you want to save money for your house down payment, or if you want to park your emergency fund where liquidity matters, you can choose the first bucket. It's called tax now option. Well, high yield savings account also comes under tax now, which means the interest that you earn from your high yield savings account, you have to pay tax in a given year. And the second one is tax later. Tax later account can be used for long term goal like retirement. And the third one is tax advantages, also known as tax never. This account also can be used for long term goals like retirement planning, kids education planning, medical expenses, or income replacement like life insurance. Knowledge is not power until it is applied. Make use of tax advantages or tax never bucket to maximize your wealth. Guys, if you find this video added any value to you, please share this video with your friends and colleagues. Let's grow together. And let me know in the comments which option you like the most. Tax now, tax later, or tax never. We'll see you there in another video a week from now. Until then, I am Prakash.